So I think thanks to Marius sending this intersection of the Fibonacci and the owl. Well done. My next, maybe my next tattoo. Let's take a quick look at market health check. So yesterday we had this, we were looking at this little formation, you know, the resting Buddha, where we saw that the previous 1, 2, 3 failed sharply, bottomed out, RL10 rolled over, crossed the baby dragon, re-entered the floodplain, entered the dragon today. So we got this little 1, 2, 3, and our concern was here, what happens? Does it fail again? Does it break out to the upside? And so the vote was large gap up through the edge of the dragon. So you automatically get an SSC minus the fact that the RL10 hasn't crossed it 30 yet. But I'm willing to take that as an SSC. That's a nice entry right there. And then we got the, you know, so it opens here and then follows through. And then in the last minute closes really strong up around 380. So it gets well out of the dragon, all the way up to the RL90, all the way up to the PSAR flip, which is a good thing. Pretty close to the Bollinger Band mean and the 10-day high. Notice what that does to the size of the 5-day, the 5-day volatility, which is now this, from low to high, which is, as you know, that's as big almost as the 10-day volatility. And this 10-day volatility is now enormous compared to the last two. So this feels like it could be a turning point. All signs point to yes. The short-term momentum is up. A large range day today, closed very strongly. So we'll see what happens over the weekend. We essentially got the start of, this would be the SSC entry right here as it crosses, you know, as it closes on that PSAR. But I would be willing, was ready to take that as a 1, 2, 3 entry right there today. So that all feels pretty good. RL10 rolled up. This will probably change to spring early next week. And you can see the baby dragon racing to catch up. So all things bright and beautiful. What could possibly go wrong? Oh yeah, the same thing that happened over here, the big sell-off. So we will be mindful that if this fails, then the next target would be 374, belly of the dragon, and then the belly of the RL10. So those are the two downward moves. But that was a pretty strong finish to the week. Let's see what the sectors did today. Starting off with the S&P at a little over 3%. The Qs were the best at 3.4. Diamonds at 2.7. Emerging markets at 2.37. Treasuries were the worst performer, minus 1.38. Here was the cutoff line for you know, gains versus actual losses. So tech in the large caps, and there's the Russell, I should say also. So your speculatives were the ones leading the way today, and leadership from the U.S. So when those big three are working, that's a positive sign for the U.S. All right, let's look at the underperformers first. So wood +3. Then this cluster in the energy sector. So you get Simon Property Group, oil, Arc Genomics, lithium, and Wheaton Precious between 3 and 2.7. Then this next cluster of underperformers, you have real estate, staples, Bitcoin, energy, oil exploration, biotech. We're up about 1%. This is between 2 and 1%. Then marijuana, blended commodities, Aussie dollar, agriculture, 0.34 to 1%. Brazil basically flat at 0.2. Internet crypto infrastructure, BOCT, was flat. Clean energy and VIX both losing. The only targets it lost today, Devon Energy, -1, as energy continued its underperformance. Rivian and Robinhood, fractional gains. Apple underperformed 2.45. It's a pretty good day in tech when Apple underperforms and it's up 2.5 and still one of the worst. Let's take a look at the outperformers. So this cluster here, you have the other lumber, 3.5, Mexico tech, finance, discretionary materials, and Arc Innovation between 3.5 and 4. The FANGs, 4.5. Blockchain and the global future of finance, 4.75. Blended large cap crypto, still trying to recover all those massive losses in crypto. So don't be fooled. Outperformers, Ethereum and Coinbase, 9.5, 6.5. And now the ones we set up yesterday, Alcoa, 5.8. Cliff Natural Resources, 5%. U.S. Steel, 4.75 or 4.33. Massive goodness, all the metals. So the metals had sold off harshly and were slow to rebound, and we're in Godzilla territory. And XLB, the materials, had underperformed the S&P. And so we said, well, this little recovery could be a critical state breakout to the upside, and that's what we got today. Otherwise, Tesla, 4.5, closed above at 737. That's good news. And Microsoft was the other outperformer, fractionally better than the broad market. So this was a big day for a bunch of sectors. So this was broad-based sector performance. Now, earlier this week, we saw that first turnaround in the S&P was mostly the S&P, and it had outperformed most of the sectors. This is now, we're starting to see a little differentiation in the sectors as they pull away from the S&P. So we'll be looking, so you have a nice mix of finance, tech, materials, and staples. So that's where that new outperformance is compared to the S&P. And it's all large caps buying the key leaders. That's how I'm reading that. So would expect to see some more of that. That's essentially a buy on dip response. Okay. So that all looks pretty good. Let's run through the weekend reports first, then we'll do the sniper trades of the day. Since we're kind of in a mood for reports. There we go. Come on. All right, we start with the weekend report dashboard. So still in, come on, still in bearish normal. This little recovery today gave a nice boost to the short term. Long term is still problematic, although it has come out of the dramatically oversold. That's a very healthy sign. So we're going to see a lot fewer Godzillas. We're going to start seeing some popcorns and fence sitters now. Risk Z is still warning us risk off, but it has started to improve. So that's a good thing. ETF2 is still at 0% exposed. So the longer term is still cautious, but you can see where the winners are now at the current readings. There's still some residual strength in energy, although that sector has been beaten down pretty well. I'm liking the real estate as that recovery asset right now. Stealthy. Monthly market health check. We came down and tested the Bollinger Band mean and then made a nice strong recovery to the upside. To me, that stop should still be pretty tight at the Bollinger Band mean. I don't want to let it reverse and get below about what is it, about 375, 380. The 9-day, you can see just how massive that sell-off was, and then pretty nice little recovery, but it's only halfway up the stack. It's still at Z-2. So you still have to respect this as a fragile market, even though it's had a couple of days of recovery. So I think my stop would have to be like right about here, 375. The weekly, the RL10 has turned. So we've got like a 1-2 happening. So this would be a 1-2-3 entry for a continuation play to the upside next week. And then the target would be, we'd like to see it get back to first the PSAR into this region, PSAR, and then the Bollinger Band mean. So that's our target region for next week. We'd like to see that. Has to get through some strong resistance here at the edge of the dragon, the Z1, top skin of the dragon. That's when you can start breathing carefully, and then maybe even that little bump right there on the weekly. That probably has key resistance. But you can see there's still a nice move all the way up to like 418 available next week. The 3-day gave us a 1, 2, and then a 3. So we should already, on the 3-day, you could already be long. It's got to confirm by getting through the dragon and the PSAR back to the Bollinger Band mean, but that all looks feasible for tomorrow. Strong level of support here below the turning point in the RL10. That would be the sign of your collapsing dragon right there. That's got to be your line in the sand. We've already seen the daily. The ETF2 and BMR models still showing everything in cash. You can see the strong hit that energy took for a second week in a row, and it's brought those numbers back to simply outperformance. Right. And notice that the underperformance here on the blend, those are all negative. They're in the green, but they're negative. And this just shows you how painful those last 3 to 6 months have been. Here was some real strength in the tech leaders that are leading the way. That should tell you where the strength is. But I also like this little stealthy play here in real estate, which is just starting early. I like that. Commodities took a hit, but that's still a safe play against inflation. That hasn't gone anywhere. China is benefiting from trade from Russia and not spending cash on battling Russia. Smart. There's your real estate. Even clean energy had a nice little bump, and that's back at an attractive price point for framing long-side trades, tactical trade only. The healthcare, Merck and Amgen really did well. There's Johnson and Johnson also doing well. The whole healthcare, and then United Health. That's the secret right there. XLV. And then the old reliable tech leaders, Microsoft and Apple. That's why we track them at those turning points. Those are the easiest ones for professional money managers to buy large quantities because their market cap is so large. They can buy into that and get that tech leadership with safety. That's a flight to quality and a flight to tech leadership quality, if I can say it that way. Boeing continues to amaze. US still underwater except for the Dow. That's the Dow right there, large cap value. China is now en fuego. This is just residual strength in commodities and energy. But now you can see staples and utilities playing catch up here in the sectors. Oops, sorry about that. Hit the wrong button. ETF liquidity, we're looking at the ATR percentage to look for the most liquid and volatile ETFs. So energy, biotech. Look at the volatility in oil and gas exploration. That's why XOP is such a good trader. Brazil remains excellent, as are the gold miners. Sniper traded the day today, was in peak. So we found that last week as a Godzilla, and that thing has done nothing but just allow us to continue to trade a low risk idea. This is benefiting from both the strength in real estate and also strength in healthcare. So this was the opening right here. This was the standard risk box at 20 cents. Gap up opening, breaks out above the previous resistance. We just hold our nose and buy it, put our standard risk box in, take the exit when it crosses the dragon. Routine about 3/4 of an hour. As soon as that reversed so quickly, I put 2 positions on, because if I hadn't gotten out of the first one, then that would have been the logical place for me to add a second position. So I just quickly put the 2 positions on and with the standard risk. And then by the time it gets to here, I'm just using the like a 2-bar low as my risk box. And that continued to perform well. So that's a residual Godzilla that is just getting better and better. Let's see if we can find that one. Just to put that one in context, one of the benefits of hybrid trading. Let me go to the S&P here real quick. is that once you hook into something on a swing trade, this was the intraday trade. All that thing did was just go. This is where we put that second position back. So this was the exit that we just showed, and this was the second position, or adding the two positions back on. So all that did was just continue to crush. But what I want to show is, if we go to the daily, this is the region in which it triggered for us 7 or 8 days ago on the Godzilla, right? What is it that show? Why our boxes aren't showing? Stand by. I'm trying to sort out why the boxes are not showing. There we go. Sorry about that. Momentary brain malfunction. So this was the region over here where the Godzillas were firing. This was back when the price was around 23. And it's moved up 15%. And then we've been trading that intraday and keeping a piece for the overnight trade based on earnings from intraday. So the Godzilla, when it doesn't fail, gives you that nice rebound all the way back to the PSAR. And now this is at a natural turning point. Now that it's made it through the dragon and the PSAR, that's the beginning of a daily trade that we would think could take us up to these resistance levels here. So the intraday trade on Godzilla and the sniper trading is a nice way to earn the capital that you can then roll forward into swing trading. So that's what we would call hybrid trading, check or hold. So you see that in peak, and then ARE is another one that we'll see, looks just like that. Yeah, ARE did the same thing with that, finding Godzilla's down here, and now we've been trading that one consistently for the last few days. You can see that in the nightly podcasts, and also the sniper trades of the day in the archive on Patreon. The other thing I like is that this is still early days when you look at the daily chart, and you can see that it's just coming out of overbought or oversold conditions, I should say, and it's just hitting the uptick on the MACD. And it's still below the zero line. So this is early days. Everybody that loved this stock back here at 160 and at 200, they looked into the abyss, and now they're glad that it's recovered. And now they're thinking, oh, I can buy this excellent company on sale and get it back up here to 165. So there's still 20 or 30 bucks worth of range available in this thing. And you're only talking about a 60-cent intraday R10 to get you well started. So that's how you can use hybrid trading even in a bear market. You can do some low risk trading with these sniper trades. So that was the sniper trade of the day. Let's see. Let's go to dashboard 1 in the daily. So we've seen all that. Now, these short side rules here, you see that the 4 US indexes have fired. that's in the overreaction system. So what that means is that move off the bottom was so strong that it is acting as a signal to short side traders that this thing could be a dead cat bounce. So we're going to be mindful of the fact that these things are now back in a critical state. And by that, we mean, so I don't want to get carried away with all the joy and rapture of the great move today, which was acknowledged. Great. So we want to, can I draw that? No, it's not going to let me draw. All right. So the important point is that the sell-off was so harsh, the rebound has been nice. That looks like a critical state that could fail in either direction. So we entered a critical state on the daily charts today. We've enjoyed the intraday trading to get back to this point, but on a daily chart, we're on critical state. And the US indexes in particular are in that critical state. Min Pains, Coke, McDonald's, Pfizer, Microsoft, that's some low risk, no brainers. You can still see weakness in the energy market, Chevron, ExxonMobil, the industrials with CAT and Alcoa, and then AXP is lagging finance. Lots of warning signs for the possibility of a dead cat bounce. These that are highlighting in red are all the ones that are especially vulnerable if we see weakness next week because they have rebounded so nicely. So, Apple is going to be a key indicator there. Boeing has done really well. You see, that's the anomaly in Boeing, how well it's been doing. Still lots of auto framers in great shape here. In the ETF 30, also a ton of auto framers, lots of overreaction short signals. So again, we got to be mindful of the possibility of weakness re-entering the market here. Nothing fundamentally has changed in the economy. This was probably just central bank buying to put in a bottom. But we did see on the positive tip, materials and finance. Finance is the least surprising, as banks are probably buying bank stocks right now. Oh, I do want to come back and highlight also the metals and mining recovery was nice especially after that bit of downturn that it's had over 10 days, 1 month, 3 months. So that's part of what prompted that nice run today in the steels. Ton of auto framers. Here's your framing data for hybrid trading and mechanical swing trading. Still a lot of really favorable reward to risk ratios to benefit from. And the ones that are at the top of the stack are the ones that are most vulnerable to sharp sell-offs if the market gets weakness next week. So you see energy, some industrials. I'm always loving when I see Brazil in the list. Only two symbols, gold and Procter & Gamble on the squeezes. It's nice to see Tesla in the third position as a squeeze. That's nice because it was not a runaway up move. Regression line fractals. These are the members in the Dow that are the biggest value plays. I like it when I see Home Depot, Apple, and Walmart more than 5 ATR from fair value, but especially U.S. Steel, almost 7 ATR from its fair value. So I'm liking that. Similarly, finance has room to run as a sector. That's pretty interesting. Only two symbols in the S&P for the Godzilla. None in the tactical symbols because they bounced so hard. But now we're starting to see some fireworks and popcorn up in here. So these are all the ones that are extraordinary on the 3 look-back periods and have had an explosion of volatility on the 5-day. Now, what makes Merck so darn interesting is how small today's one-day volatility was at 0.27. And really, you could say the same for Bristol Myers, Johnson and Johnson, Eli Lilly. So the entire healthcare sector deserves our attention as a potential target, because that suffered the least during the sell-off and is postured for big gains. The fence sitters are the ones that are in the middle of their midterm and long-term look-back periods. I especially, these are all experiencing large 5-day volatilities. AEE and Procter really stand out because of the size of the 1-day move. It was large in AEE, but extremely small in Procter. So Procter is really interesting, and it's only a 50-cent risk box on them in the morning. So PG should be on our radar. When you see a large, like in Procter, when you see a large 5-day and a very small 1-day, that should tell you that it's poised for some follow-on movement. Let's see if we can see what that looks like. Take a quick look at Procter here, if we can get it up on the screen. Come on now. Nope, not cooperating. Come on. Stand by. Let me close a few programs here. Stand by. Let's try that one again. Mic check. We're back. Microphone check. We back on? Yeah, strange. All right, back to business. Have you already seen the stats? Mostly in the winter. Here's your sniper stats for the tactical symbol set with everything you need to find those good sniper targets, and your RL10 and range stat figures. really shake a stick, and you had big gains today, except in the area of energy. You can see that's and Brazil. That's where the weakness was today. Big vote of confidence going into the weekend. All that looks solid. Volatility starting to diminish once again. That's favorable to the long side. But again, this is what I'm considering another critical state. The last time it did that, when it recovered and moved into the middle of the river, it had a harsh sell-off. So we're going to be mindful of the fact that this thing could go strong up or strong down from out of that critical state. And the one that causes the most pain to the most people is a downward move, because there will be the universal optimism from the strong 3-day move that we've just had. Not saying it won't go back up, but I would also say the 10-period slope is still just at the 0 line. So there's room for more upward movement for sure. And the 30 still has some recovering to do. And the 90 has really been bruised. It's like 3 sigma off. So there's room to the upside for more follow through. I'm going to be very optimistic on the upside trade for the first 2 to 3 days of next week. It'll take that long to fully run its course, based on how harsh the sell-offs have been. Yeah. All right, that's all that. Let's jump into sniper trades. All right, here's Wynn. So Wynn, WYNN, is a frog champion. It's been a while since we've been trading that one, but it acts like a manic depressive stock, much like gambler psychology. The entertainment and travel and vacation mindset out there in the Wynn casinos. So standard risk box on it is $1. Gap up, moved $1 off the low. It's above the dragon, so I buy it. By this time, I should be at no lose. Pick your exit strategy. It holds in the middle of the dragon and exit at the PSAR. So that's about a little over 2R. Re-entry, I'm taking about half a risk box. And by this time, as it moves into the lunch period, I move my stop up to like a 3-bar low and lock in the green box. So a slow grind, and that actually closed pretty well. So that's Wynn, WYNN. ARE, this is that one of the 2 healthcare real estate guys. So about a 60-cent risk box. Again, gap up, dragon rising, moves a box off the low, buy it. Routine exit at the edge of the dragon for about 2R. Could have been short, but the move was so strong today, I was reluctant. Missed a tradable short. Bought the COTA 2 standard risk box when it crossed the dragon, hit the PSAR. Standard risk. No follow through for a scratch. So about 2R in ARE. Peak, the other healthcare real estate guy, routine entry, gap up, risk box off the bottom. I was using 20 cents on this one. A little slower out of the gate, routine exit, COTA 2 re-entry. This was that trade of the day. So I put the 2 positions back on because the sell-off was so quickly reversed. That's where I would have had, if I hadn't exited, I was going to put a second position on there. So I just went ahead with 2, tried that, and then locked in those gains on ARE. Trade of the day. Microsoft, key tech leader we saw yesterday. I'm using a dollar manageable risk. Moves a dollar off the open. In the first bar, in the first 10 minutes, you're holding almost 4R. Doji, get paid. That one is so instructive. It could have taken, and this is a point that I want to make. When it comes to expectation management, this is just the way I think. Your mileage may vary. Why are you not letting me draw? All right. Now, if this had taken a path upward like this, and then it gets to this price level, right? You'd have been really happy taking that exit, and you said, all right, that's fine. On this one, what you got to watch out for is that the run up was so strong that you want to believe in it more. Bottom line is, whether it gets there in 4 bars or 40 bars, if it gets to the price level that you were entitled to believe in, I don't get extra confidence in that. I am measuring reward to risk. And if I can get my reward faster, it's just more efficient, and so be it. That's the way I look at it. Caught a 2 re-entry, did not even penetrate the dragon, held support at the spine. So standard risk box, micro gain. Now I'm a little concerned that it didn't make a new high and rolled over quickly. I considered short on this one, but tech was the leader all day and the whole market was raging up. So I didn't want to get short a tech leader, but it did occur to me that was a signal that I could take. And if I had taken it, I would have wanted to get out of it here because I gave it 4 bars to fail and it didn't. So failure to follow through or failure to fail further is reason to get out of that. Caught a 2 and micro loss. So got paid pretty nicely in Microsoft, about 3R. Check or hold. PayPal. So the financial disruptors were strong yesterday. Here's a nice big strong gap up. Standard risk box off the open. Routine exit for about 1, 2, 3, 4 on PayPal. Again, that's just a gift. I don't believe in that thing at all. Now this is one where, because digital finance disruptors have been so volatile, I was willing to take the short on this one because this looked more opportunistic than Microsoft. For example, I have more confidence in the idea that fund managers would be willing to hold Microsoft over the weekend than PayPal. So this was a tactical opportunity in that sense. But no follow through, so scratch. Caught a 2 entry long side and basically a scratch. So one quick hit for about 3R in PayPal and then not much else. The Tesla trade, gap up, standard $7 risk box, no lose plus dinner for 2, routine exit, routine caught a 2 re-entry on finding support at the edge of the dragon. Routine exit for about a half an hour. Tempted to be short. Then I said, nope, Tesla. Caught a 2 re-entry. Half an hour loss. Caught a 2 re-entry. Quarter of an hour loss or scratch. Failure to follow through. So more grinding than gains in Tesla today. The first 2 trades, though, worked pretty well. Cliff, so this was the steel company, natural resources. Standard risk, breakout on a SSC, took out the previous PSAR. Up we go. Routine exit for 2R as it's coming out of the dragon. Just wasn't persuaded. Brazil. So it was like a morning hook, which I missed. And then I took the SSC when it crossed the dragon. There was a 1, 2, 3 entry in here in the middle of the dragon. I said, now we're so close to resistance in the hump of the dragon. Let me see it actually get across the dragon and hit the PSAR. So standard SSC entry with a standard risk, standard exit. I probably gave back more than I wanted on a 1, 2, 3. So that's about 2R. Failed short at the PSAR flip. So get out of that quick for half an hour. Tried short again, scratch. Short again, half an hour. That was basically just grinding. Looking for easier targets. Here's US Steel, the steel maker. Gap up and go, SSC. Basically a quick scratch and then a re-entry on a new high of the day. That one worked better. Routine exit for 1R. Starting to fail. I got short. This pulled back another 20 cents, and I made about an R on that one by the time that trailing stop hit. The final, and I showed you win already. Yeah, we already did win. So those are the sniper trades of the day. Some pretty good work. I was especially pleased with the preparation and the readiness for 2 sets of symbols. One was the steel companies, which really rebounded nicely today, and then the continuation trades in the healthcare real estate guys, Peak and ARE. I was really pleased with those because that was a follow through from preparation, and they made the least surprising moves. That's really good grinding. I would recommend that you take a look at those if you're interested in sniper trading. And both of them are examples of how you can hook into these sniper patterns and then stay with them and get used to trading those symbols. Those members of the S&P 500 that are not the uber large caps, but are in the S&P 500, they're very liquid, but they can actually move a little bit out of phase with the broad market. Sometimes the problem with, trading like Microsoft and Apple is that they're such a big part of the index that they move the index and the index moves them at times. That's the way it feels. So it kind of caps the moves that they can make. Whereas some of these ones that are kind of in the middle of the S&P 500 or the smaller members of it, they can actually take on their own directionality, semi-independent from the market. You still get a market influence, but they can be a little more volatile, which is what we want on the intraday trade. Check or hold. All right, let's try to get the why is it not working for me? The browser's acting funny here. I'll have to trim this out of there. Appreciate your patience. I have to reopen those files, sorry. All right, let's take a look at Paul. Let's see, we got some trades from Griff. Appreciate your patience. Not letting me draw. All right, I'm just going to comment then. Probably have to reboot. All right. Okay, so for Paul on Tesla, a short that got paid, there would have been a natural reentry here at the PSAR flip. This SSC is late. The entry should be at the PSAR flip, but good exit. The short was a little late, but a good exit. This entry should be at the PSAR flip, and would have been a fractional gain. The reentry was slow, but a good exit. The reentry here was slow, and so a lot of these you're losing about between 0.3 and 0.4, which makes a big difference. So we want to just work on our timing on that one and be ready for those. You could actually anticipate where the dots are going to be, and then be ready to hit it as price goes through it. If your trade platform allows you, you can even, if you advance the PSAR 1 bar and pushed it forward, then the PSAR dot would already be drawn for you. That's a technique. It has a micro advantage, but it reduces some of the indecision about when to get in. Griff showing just the SSCs today. It was -1 because the long, this was from yesterday, the long sides were not working. But when you look at all the patterns, you get a nice payoff when you add in the SSC with the Kata 2 and the collapsing dragon. So nice work in EWZ. That's a template for how to do it. Jack does a really nice job for 4R in Devon Energy. He notices the gap up, harsh sell-off, holds support at the PSAR. As it crosses the dragon, he gets his entry with the standard risk at the bottom of the dragon, the PSAR dot, gets paid nicely here when it comes through the dragon. So may have given back a little more, but that's pretty good. This is a great short on the PSAR flip, which gets paid. The second position he put in scratched, so I'm glad to see he didn't give back much on that, and it comes in with 3.8 on. Let's see, Woj on the WMB3 scores 2.6 today and 9 for the week. So despite all my grumbling at you, you're grinding these out pretty well. making what I'm really pleased with is on this one where you get the above the emerging dragon. He says he had that order in place, always framing at the price level. So he has that in place. And then when it surprises him through there, he doesn't have to chase, it's automatically hitting. And then he does a nice job of collecting rent on that gift. And he's getting paid on the big moves otherwise. So really well done. And then on Tesla, there wasn't much in Tesla except for that early move, which he did get. Scratching, or I'm sorry, that's on Cat, and scratching through on Tesla, and nice work on Target. Some of these non-name stocks, Target's an example of that S&P 500 company that can trade independently from the market. So the market was strong, but this thing started off mumbling around and then found its wheels. So you can get that kind of outsized performance on those mid-level majors there in the S&P. So that's really nice work and a strict exit. That's really well done. I think my brother had one in there too. Had an Alcoa trade for about 3.5. Just right by the rules. Trust the PSAR. The short didn't work, so he's quickly out, quick reversal. And now notice that the routine trade, when it works, is better than the routine trade that doesn't work. So be large when you're right and small when you're wrong. Being wrong means actually not that you pick the direction wrong because you're just following the rules, but to be wrong would be to not follow the signal. And so the signal gets him in, gets him out quick for a fractional loss. The signal gets him in, gets him out when he should for a nice win and a really nice win. So good work to the boys. All right, folks, that's everything we got today. And we will be ready for the True Story Circle crew for tomorrow morning at 8:30 regular time. The Creativity 202 folks are the Euros at 10 o'clock on Sunday in this room. And then the Creativity 202 for the US students Monday night at 7. Otherwise, we got the regular 8:30 session tomorrow night for swing trade framing. And we shall see you on down the road. Girls came home early and they're flying out to link up with Linda at a wedding over on the East Coast tomorrow. So we're going to go eat some sushi, I think. Take good care and see you tomorrow.